Hey guys, it is Julie here with JT.Wealth. Today we are talking about Nordic American Tankers, so let's get into it. Alright guys, so it has been almost a month since our last NAT Stock video, and with their much anticipated earnings report coming out before market open on Monday, we have a lot to cover. First, I just want to do a quick reminder, make sure that you are subscribed to the channel so you stay up to date with all of our latest videos, and smash that like button as well. Today, we are going to chat about Nordic American Tankers and the effect of the coronavirus on the tanker industry. We'll go over some of their daily rates versus their operating costs from Q1 and into Q2. We'll take a quick look at their Q1 earnings report beat. We're going to go over some recent tanker Q2 reports from 3 other tanker companies just to help anticipate what the tanker market has been doing and help us project a bit for what we can see from NAT. We'll quickly discuss the potential for a super cycle in the tanker industry, and then take a look at the Q2 expectations and future outlook for NAT stock. So I'm going to keep this part pretty brief, guys, because I know we've covered it a lot already in the past, but I just want to give a really quick background on who Nordic American Tankers are and why they've just been such a hot topic of discussion lately. Nordic American Tankers is in the oil delivery and storage realm with their Suezmax oil tankers. So at the beginning with the coronavirus in 2020, we saw oil prices drop significantly, and then we saw the need for the storage of oil rise significantly. And this has caused a really big boom in that oil storage industry. This boom meant that NAT was able to charge over $100,000 per day for some of their oil tankers at the height of all this. Now, NAT's daily operating cost is about $8,000 per day. You can see on our lovely tanker market rate chart that the average daily rate for 2020 has been about $43,500 per day. So pretty nice profit margin there. Now, tanker rates have come down a lot over the summer, but NAT was reportedly booking contracts for 3 to 6 months during those peak periods, and those are the periods that are going to be showing up in this Q2 earnings report. Now, let's take a look at NAT's last earnings report. So they were estimated at 25 cents per share and came in at 27 cents per share. So we had a nice little beat there. Before that, we had 2 losses and 1 more beat. So a bit of a mixed bag. As we prepare for NAT's Q2 earnings report, let's take a look at 3 other oil tanker companies who just recently reported their Q2 earnings. On August 6th, EURN and Scorpio both had their earnings report. Now, EURN had an earnings beat, whereas Scorpio had an earnings loss. Nevertheless, both companies showed a really solid net income. In addition to that massive net income, EURN has also been able to maintain its dividend payments while buying back some shares. And Scorpio has focused more on paying down some of their debts to help improve their balance sheet. But the one part that I love best is that both companies reported being able to book over half of their Q3 at rates that were far above those annual averages. Now, a third company, DHT, also just reported their earnings on August 10th, and these guys showed one of their strongest quarters ever. They increased their dividend by 37%, they're sitting on a strong cash balance, and they were able to pay down some of their debt. Now, DHT also reported that they were able to book about 75% of their Q3 at rates that were above $51,000 per day. So all 3 companies reported a significant portion of their Q3 still being able to pull in those higher rates. So that definitely bodes well for the future. For DHT, they have moved up about 7% during the week after their earnings report. Scorpio we've seen go up about 6%, and EURN has stayed fairly even. One other thing that is keeping people excited about the future outlook for the tanker industry is the expectation of it entering into a super cycle. So this article summarizes that perfectly, with the old saying in the shipping business being there's either too many ships or too few ships. So between 2008 and 2019, there were generally too many ships. But towards the end of 2019, we finally entered a period of too few. Over the last 9 months, tanker companies have made fortunes. They've used this money to pay down their debts, increase their cash balances, buy back shares, and pay dividends. The one thing they haven't spent this money on, though, is buying new ships. So reports from the shipbuilding industry shows that shipbuilding has declined 57% in the first half of 2020. Those are the lowest levels in this century. And the reason that shippers aren't ordering new ships is that there's been a great uncertainty in the shipping industry over emissions. So there's new regulations that are going to be coming about. So obviously they don't want to buy new ships until they know what regulations need to be met. So without an increase in the number of ships, those ships that do exist are going to be increasingly utilized. And this can lead to a rise in the rates as that demand grows. All right, so let's chat about Q2 expectations and forward outlook for NAT. Our earnings preview from Benzinga shows that the earnings per share is expected to be around 28 cents, sales likely near that 94.35 million. And if we take a look at the same period year over year, it was at 11 cents per share with sales at about 30 million. So if they hit these expectations, their earnings would be up 354% and sales would be up 207% on that year over year basis. Now, I always love to take a look and see what are some of the price projections that analysts are discussing. We have one article here saying that there is an analyst price target about $6.28. We also have the Wall Street Journal market showing a range here. So a high about $8, median at $6, the average is coming around $5.21. Personally, I do expect NAT to have an earnings beat, but more importantly is everyone is going to be looking towards that future outlook. And what I would love to see is that NAT report they were also able to book the Q3 at those higher rates, similar to those other tankers, and thus secure a positive outlook for the Q3. I would also love to see their dividend rate stay at least the same, if not a bit of an increase there as well. Now, just a reminder and full disclosure that I am an NAT stock holder. So I'm carrying about 700 plus shares right now at an average cost base of $5.06. Now, I would love to see that stock go above $6. That would be about my minimum sell-off point, and I'd probably sell maybe half of my shares at that time. If we don't hit that mark, then I will probably just ride it out, collect my September dividend, and kind of reevaluate my time frame at that point. So that's all, folks. As always, please remember to hit that like button and make sure that you are subscribed. Leave a comment down below and let me know your thoughts. Are you a NAT investor? How do you think the stock price is going to react after this earnings report? Thank you guys so much for watching. I hope you have an amazing weekend. Cheers.